from Continuing Global Asset Management. My name is Manu Walia. It's February 28, 2020. The reason I'm putting this video today is because the markets, as we speak, are down about 700 points. In other words, the markets have lost over 15% in the last week or two. This is since February 17th, mid-February. Well, one of the quotes that I heard yesterday on CNBC, even though I call it the Cartoon Network for adults, was that fear is a reaction and courage is a choice. Winston Churchill. And I thought that that was so prudent because in all our models and all our newsletters and all the articles that we put together and try to gauge where the market is going, they're futile when we have events like this, which Nicholas Nassim Taleb calls them black swan. Of course, 15% is not a black swan event, but it is a pretty big, pretty significant correction in the market. I mean, to put it in perspective, the market's lost between $3 and $4 trillion in less than a week. So is it time to buy or is it time to sell and head for the hills, or what are we going to do? So back in October, when the markets were trading exactly where they are right now, maybe a few points up or down, and I'm talking about the S&P 500, I had put out my October 2020 newsletter, and I'll read out the conclusion on that. In that newsletter, I had mentioned for the short term, even though things can change quickly, rendering even the most sophisticated models useless, we believe that achieving a greater than 6 to 7% earnings growth in the US will be difficult. Currently, a prudent risk-reward inference compels us to be cautious and therefore suggests raising cash in growth portfolios. Well, think what happened. Since October, we went straight up and then straight down. So we gained about 16, 17% since this newsletter came out, and then we lost about 15% since. So has anything else changed? So what I did was I went back and I looked at my model. It has about 6 different variables, and I reduced the top 2 or 3 variables by about 15 to 18%, because the coronavirus, let's say, has a pretty negative impact on the economy. So what I did was I reduced the earnings of the S&P 500 by about 18%, and I reduced the investor sentiment. I took that, quantized it, and put it in the model. And what I came up with was that the markets can go up another 12 to 15% over the next 12 months. Now, this is not a function of anything that has changed fundamentally in the US economy or the global economy, but I think the negative technical or psychological impact from coronavirus has been so much that we've given up all the gains and more, and we may do a little bit more than that over the next week or so. But like I said, I started with this video by saying that fear is a reaction and courage is a choice. We should adhere to that. People who will make money are the ones who buy low and sell high. When you have events where the market has gone down so much and you still believe in the fundamentals, it's time to take some positions. So this newsletter, the February newsletter, we concluded by saying the recent decline of 6 to 7%, again, this was 3 days ago. The markets have lost another 7, 8% in 3 days. So let me start by saying again, the recent decline of 6 to 7% in the broad-based indices is a technical correction according to our model. And I know I'm going to get a lot of hate mail, but that's fine. We believe that this correction provides growth-oriented investors with an opportunity to add or increase growth-oriented investment exposure to their respective portfolios. We believe that this would be an appropriate time to reduce cash by half and use it to add and increase equity growth exposure. What that means is we've been telling clients to have between 15 and 20% in cash. Now, I'm not going to say that you go ahead and put all that cash to work, but you definitely want to add to positions like the Microsofts of the world, like the Googles of the world. I would even go into saying that some of the other companies that have been beaten down a lot, like the Disneys, the Costco's, which hasn't been beaten out that much, but add to those positions and don't look at the ticker on a daily basis. The fundamentals are still intact, and we believe that we could have a very good 2020. On that note, I'll sign off and wish all of you luck in the markets. See you soon.